Well, that's it, folks. The end for Netflix is upon us because they only profited $135 million in the past quarter, along with making $4 billion in revenue and only gaining 8 million subscribers. The end is here for Netflix. Did you get it? It was like the Bird Box thing. Today I'm going to be reporting on Netflix's Q4 2018 earnings without trying to sound too much like Jeremy from Financial Education. I love you. Currently, Netflix stock is down about 3 to 4, maybe even 5% right now. It's trading at about $330 per share. It's not doing so hot. Netflix, as we know it, it can be argued as a tech company. A lot of people say it's a media company, so it doesn't qualify as part of FANG or whatever. But technically, it's a tech company, and these analysts are anticipating for Netflix to be coming out with these blockbuster numbers, these huge numbers that just blow everyone out of the water as far as subscriber growth. They want Netflix to be beating on all categories, on all cylinders here. They want them to be beating on revenue made in the quarter, EPS, which is their profit, and also subscriber growth. So there's a lot on Netflix's plate that they have to be beating here. And to be honest, they just can't really keep up with these numbers. Netflix, as far as revenue goes, this past quarter, Q4, which ended in December 2018, they reported revenue of $4.19 billion, which is about $4.2 billion, right? They were estimated to be making $4.21 billion, so they were shy of about $10 million. If Netflix had brought in $4.1 billion as analysts were expecting, if Netflix had brought in $4.1 billion in revenue, that would have been a 28% year-over-year revenue growth for Netflix, which is what analysts were hoping for, but instead they brought in $4.19 billion, which equates to 21.5% year-over-year revenue growth. Which honestly, for any other company, it's nothing to sneeze at. If Coca-Cola came out with these numbers, if AT&T, GE, any other company that's not a FANG stock or a tech company came out with these numbers, they'd be phenomenal. But when you take a look at tech companies such as Facebook and Amazon, you see 40% year-over-year revenue growth, which is what I think they're trying to expect from Netflix here, but that's just not the case. And I don't really think that's what Netflix wants people to expect from them. As far as subscribers go, Netflix was estimated to bring in 9.4 million new subscribers in the past quarter. This is worldwide. They actually brought in 8.84 million new subscribers. So they didn't quite hit the mark, but again, it's not that big of a miss. That's about what, a 0.5 million miss, so that's 500,000 subscribers that they missed out on. That's not a terrible miss, and especially because Netflix right now has somewhere in the range of 140 to 145 million worldwide subscribers. Then you start getting into the law of large numbers. So like once you start getting a certain amount of subscribers around the world, what else can you really expect? Netflix can't be bringing in 10 million new subscribers every single quarter until the end of time. There's just not enough people that really have internet or have a need for this kind of media tech right now. So I mean, you can't really ask for a whole lot from subscribers from Netflix. And EPS for Netflix, which is otherwise known as profit from Netflix, is 30 cents per share. There's about 450 million shares of Netflix out there, something like that. So 30 cents per share, and then you times it by the amount of shares, you get the total profit that Netflix brought in this quarter, which was $135,600,000 profit. Netflix brought in $4.2 billion in revenue, and only about 100 million of that was actual profit, which means that about 2% of the overall revenue was actual cash flow, which honestly isn't great. But here's the good news about that, and that's that analysts were actually not anticipating for Netflix to bring in much profit at all. They were actually only estimated to bring in 0.24 cents per share. Netflix's year-over-year profit was supposed to drop by 41%, but it only dropped by 13%. So it's not as bad as analysts were anticipating, and in the world of Wall Street, really the only thing that matters is what analysts think compared to what you actually brought in. So obviously we have mixed numbers here. Even though they have growth on all sectors, they were just shy on revenue expectations and subs as far as expectations go as well. EPS, They actually did better, so that's great for Netflix. Wall Street right now is just concerned that Netflix's subscriber growth is slowing down, and they think that this is going to be the end for Netflix, and I really don't think so. Here's the reason, is because, like I mentioned, you get into the law of large numbers. Once you have so many consumers, there's not that a whole lot of people in the world that really need a Netflix account, and if they do, their brother, sister, mom, dad, they already have the account, so they just share it and watch it in their living room. So they already have the audience that they need. But what did we see Netflix do just a few days ago? Netflix increased the prices of all their subscriber plans by 13 or 18%. The cheapest plan was $8, it's now $9, and the most popular plan was $11, it's now $13. As we see, Netflix has huge pricing power. Here's what I mean. Consumers can either be paying $50 to $100 a month for cable TV, like DirecTV, Comcast, Dish Network, whatever, or they can be purchasing Netflix for about $13, $8 a month, whatever they want to do. It's still so much cheaper than cable, and the quality, the content that they get for it is a whole lot better because you can watch anything on demand. They have Marvel movies, they have Disney movies, Netflix originals. Bandersnatch, Bird Box did phenomenally well. Netflix is building up a great portfolio for themselves. Netflix can crank up the prices whenever they want to, whenever they feel like, okay, let's increase our revenues by this much this year, and they'll just bump up the prices by $1, $2. Most consumers are really comfortable with what they're paying for Netflix right now, and I bet they wouldn't really mind paying up to $25 for Netflix in the next coming years. But here's the problem with Netflix. At some point, Netflix is going to realize, we're creating all this awesome content for subscribers that have been here forever, and they're not really going to cancel their plans. So why should we bother creating awesome content when they're fine with all the content we have right now, and we can just, license some from other studios or whatever? Netflix is going to have to figure out a different monetization model, whether that's ads, commercials, or something else. Theoretically, Netflix had the same amount of subscribers in November of 2018 as they did in December of 2018. And the only real difference is that they released Bird Box in December of 2018, which was a massive success. The memes online went crazy. Everybody started watching this thing. And I don't think that Bird Box was enough to really bring in new subscribers. If you heard about Bird Box and you're like, oh, I want to see it, which one of my friends has a Netflix account? You went to one of your friend's house, or you borrowed your sister's Netflix, whatever it was. But I don't think you went out and said, okay, I'm going to buy Netflix just so I can watch Bird Box. So I feel like Netflix is putting in a lot of work into content, but they're not really gaining a whole lot because they're not going to gain the new subscribers. So they have to figure out how to milk the subscribers that they have currently, whether that's with ads or commercials, or just how often you watch a certain program and they get extra revenue for how often you're watching The Office or any other movie. Netflix obviously isn't doing terrible right now, though they're not doing exceptional either. It's just, they've gotten so many subscribers, there's nowhere for them to grow with the current model they have. Like I mentioned, they need to do commercials or some sort of ads, and I know they tried commercials in the past and it totally backfired on them, but they just got to really put their foot down and say, users, we have to put commercials in or some sort of ads. And even though Netflix stock is down, I personally would not touch this stock at all. Their PE ratio is just crazy high. I can't even think of a word for it. It's stupid high. For a company that's only making $100 million in profit a quarter, no thanks. I'd rather take Apple or Facebook that's pumping out a lot higher profit margins at a much lower PE ratio, like a 19 or a 13 PE ratio. So those are stocks that I'm more interested in. But Netflix right now, it's kind of unfortunate because the stock is valued very, very high still, and it's not performing very well. So I wouldn't doubt it if we see a major crash with Netflix in the near future. Anyway, that was my analysis of Netflix's Q4 2018 earnings reports. Let me know what you guys thought, yada, yada, yada. Same thing as every other YouTuber says. Thank you very much. Bye.